What's up, everybody? Hope you're doing well. My name's Darwin. Back with another video here. In case you missed the last one, I am a real estate investor in Arizona. I also work at a real estate investment firm for my day job and train all of our guys in how to do acquisitions, different types of investing, deal structures, and all that kind of stuff. So follow along. Hope you like it. If you do, hit the subscribe button. If not, like I said, drop me some hate mail on the back of a $100 bill. My girlfriend will thank you. Anyway, today I wanted to go over a different type of deal structure called a subject to. Some people also call them sub twos. The reason I want to do this is that one actually came in today that I was able to get done, and someone I know personally. But these are an awesome way to acquire properties. They require, relatively speaking, very little money, and they can be great for both the buyer and the seller of the piece of real estate. They can take a while to do. I would not recommend doing these with strangers because there is a fair degree of trust involved. Someone is trusting you to make their mortgage payment, and that's not something you need to take lightly. But they can work really, really well to acquire properties under certain conditions. So I want to take this video, a little bit of time, and just kind of walk you through how I got this deal done and how a lot of these subject to deals work, because there's a lot of BS floating around about, oh, I gave this guy a Snickers bar and a pat on the ass and he gave me his mortgage and now I am a millionaire. No, you're not. Lies. So again, hope this helps. All my videos are kind of for real world experience. I'm not selling some course, or if you want to pay me money, that's cool, but not how this works. So anyway, let's get into it. Subject to deals. So a couple of things about a subject to. What is it? How does it work? Why would you ever want to do one? And why would anyone ever want to sell you their house along with their mortgage? So rather than give you a whole bunch of fluffy theory, let me just walk you through kind of how they work, and then the one I did today, I'll give you everybody's reasoning behind it, okay? So subject to deal, they can also be called a sub 2 with the number 2 if you're trying to be cool, or a sub 2, TOO is going to be how they're written, which is incorrect, but you do see it a lot. Basically what happens on a sub 2 deal is that you're going to take over someone's loan payment. You're going to cash them out of any equity that they agree to sell you, right? So we are investors, we do have to make a profit, that's just the way the world works. And then you usually have to deal with some type of repairs, okay? These work really well because you can cut the bank out of the equation. Last property I did was a full commercially underwritten bank property. It was a great deal, but it was a lot of paperwork and a lot of headaches. So if you can cut that out, you're gonna save yourself some time. Good stuff. Got a new coffee mug for myself this weekend. I'm very proud of it. Anyway, so let me just go ahead and walk you through this particular deal, okay? This deal is for an older house that's here in Arizona. It's actually not far from where I live. The owner is a personal acquaintance of mine. I have known her and her family for quite some time. They're wonderful people. This is an extra property that they had bought for a family member back in the boom years, back when anyone could get a loan. So there's a family member living in the property. She's in failing health. They've managed to pay down a good bit of the loan over the last 10 years. They need to get out. We've been talking about it a lot. I offered them a couple of different terms and things on the deal structure, but they wound up wanting to do a certain thing today. So let me just go ahead and walk you through it. So we got a sister living in the house. The home is in need of some repairs, okay? Don't know where you're watching from, but here in Phoenix, it's already broken 100, probably gonna be that way until about October, so it's getting hot. Unfortunately, they don't have a lot of spare cash lying around right now, but they do have equity in the home. The AC broke, right? This is a $5,000 to $6,000 line item on a house here in Arizona, and I can tell you right now that living in Arizona at this moment in time, which is early May, is miserable without air conditioning, okay? It's absolutely miserable. So, here's the deal we cut. The home is worth about, well, let's call it $200K as it sits right now, all right? There's homes in the area that have sold for a lot more, but they're beautiful. They've been fully renovated, got all the mechanicals done, all this kind of stuff. One side note here is that I approach every deal that I look at for myself. If I can't simply trade the paper on it, meaning wholesale it out and make a quick buck for myself, I don't like flipping properties. I don't like managing that construction project, having it sit on the market. I don't like doing that. I am a buy and hold investor personally. That is not what my day job is. We flip properties there, and that's fine, but I don't want to drag work home with me. So that's just the way I think about it. So for me, this property is how do I acquire a rental, a good rental in a great neighborhood for the least amount of money, right? So we have a loan balance on the property. They owe about 120K. So 120 of this has got to go to the bank, unfortunately. We'll get back to that part later. There's some repairs that need to be made. Now, the family member living in there right now wants to stay for about a year. They don't need the place fixed up. They don't care about the paint, anything else. What they do care about is that it's May and they need $5,000 to $6,000 for the AC, okay? So what I'm gonna do, first off, is we figure out the amount of equity that's going to make this deal work, okay? So they owe $120,000 to the bank. I figure there's about $80,000 in equity in the house. Obviously, I can't give them all that, or this deal doesn't make sense for me to do, right? If I just wanted to pay retail, I'd go hire a realtor and get on the MLS. So we settled on $52,000 in equity, okay? Out of that $52,000, I don't want to have to write that check. It's a big check to write. I could do it right now because I've sold some other properties, but it's not great. So what I'm going to do from this is I'm going to buy them an AC, right? So I'm going to write a check or put that on my credit card or pay cash or do whatever it is, but I'm going to go ahead and buy them an air conditioner for the house, okay? Here's the cool part about these deals. I'm not actually buying it. I am loaning them that money out of their equity that we agreed that they would take, okay? Also, on top of that, so we're buying AC, and I've got a pretty good guy here, so we're gonna call that $5 grand cash. They also need a little bit of money to pay some medical bills, and I think there's an attorney in there somewhere. So they said that they could get by with about $8,000. I offered them $10,000 in cash just because it's a nice round number and they're personal friends of mine. Remember, all I'm doing is trading money, right, currency, cash, for equity that's in the home, okay? So out of this $52,000, we're gonna do a $10,000 payment to them so they can get caught up, right? Here's the cool part. So here's what we're gonna do. So we've got $52,000, $15,000 is coming out. Does anybody wanna do that math? We have $37K in equity left in the house, right? Hope you're following along with me. The really cool part is that they were able to get a loan modification a few years ago, okay? Loan modifications were done kind of in the depths of the recession when people were trying not to lose their homes, etc. So they had a very, very low interest rate on this loan. I think it's around 3.5 or 3.625%. It's very, very low. So the payment on this place is $650 a month. Boom. Find me a house in a nice part of Arizona that you can pick up for $650 a month. Good luck, right? So this is what really sweetened this deal, and this is what a lot of these subject to deals do, is that you're able to give them a chunk of money, especially if they've got an awesome loan, you can take that over and just make those payments for them, okay? Sounds great. I'm here to tell you right now, as some random dude off the internet, pay your bills, do not fuck with your sellers, be honest when you do these deals. They're a wonderful, wonderful deal structure if everyone does their job, okay? But I've seen these go very, very badly because people don't do what they say they're gonna do. So here's me telling you right now on the record, pay your bills, follow up on your promises, adhere to your contracts, or if I find you, I'll smack you in the head or something because you totally deserve it. Anyway, getting back to this deal. So what's gonna happen is, I'm gonna cover the AC, they're gonna get $10,000 in cash in their pocket, I'm gonna take over this payment, right? Then they're gonna deed the property over to me, right? So we're gonna do cash for deed. This is a little bit like a foreclosure or a pre-foreclosure type sale. I've got another video on that, you can take a look, it's on my channel. So we're gonna do cash for deed, dollars for deed, right? Everybody got that? At which point my responsibility is $650 a month, okay? So the next part of this deal is that the family member living in the home is not currently working because they're sick, right? If you're in the hospital, you're very sick, you can't work. So $37,000 is the amount of equity that we have left. I'm going to convert that into a note. So I owe this person $37,000. They're worried about paying a large chunk of money to the government called a capital gains tax, right? Which happens when you buy and sell a home, especially a non-primary residence. This home is being lived in by one family member, it's owned by another family member, so if they sell and they get a big chunk of money, they gotta write a lot of it to the IRS. We're trying to avoid that, okay? So this $37K, we're gonna turn this into a note. But We'll do another one about private notes here one of these days, probably coming up within the next couple of weeks. Fascinating arena. I love private notes. They're all the cash flow of rentals, but none of the headache, but you gotta have some cash to get going in. So we're gonna convert this to a note. Because I'm in a position to be able to do this, you have to judge whether or not you are or not, is that in lieu of, meaning instead of this person in the house paying me rent as the new owner of the house and the landlord, what I'm going to do is forgive her rent payments and take them out of her equity, okay? So I haven't run all the math on this note, but I think what I would owe her to pay this note off is around, I think it's $400 a month. Sorry, crappy handwriting, blame my dad, he's a doctor. So, $400 a month. So what I'm gonna do is, she is not gonna pay me any rent. Market rent on this house is probably around $750 would be my guess. So what we're gonna do is we're gonna take the market rent, we're gonna subtract it from the note. So I'm going to basically carve this payment out of her equity. So she's going to use the equity that she has in the house that I owe her to pay me back in rent, right? And all this is done, this is playing with numbers. What it allows me to do is control an expensive piece of real estate for about $15,000 in cash, and I've got one of the sweetest deals from the bank that you're ever going to get. You can't get these type of loans anymore. The interest rates are way too high. Second property, third property, fourth property for some of us out there, they are going to want double that interest rate. So this is a really, really cool way to get these deals done, okay? Everybody wins in this case. The family member doesn't have to move right away. They get some cash that they need to pay their bills. I get a sweet loan out of the deal. I get a pretty decent price point on the house. I know what I can sell it for once it's fixed up. I know what I can rent it for once it's fixed up. And it's a nice, clean transaction, okay? So we'll do some paperwork. There'll have to be some deeds. We'll have to record it. There's a private note to record. What I'm going to do to further protect myself is probably put a second position note on the property. The reason you put a second position note is to cover yourself in the event that the bank calls the loan. In the state of Arizona, what's kind of cool is if you have a second position note on a house, you're allowed to pay principal on the first to protect your position. That's a little bit higher level stuff, but it does work really, really well. So, this is a subject to deal. What does it mean? It means you have taken title to the home in the form of the deed, subject to the original mortgage, okay? All means you're gonna give them some cash, you get the deed to the house, you're taking over their loan payment. Simple as that, okay? Now, again, there are great ways to do it. They can go wrong if you don't pay your bills. I've seen them go sideways because tenants have moved out, investors have run out of money, all that sort of stuff. I am fortunately in a position where I've got a decent amount of cash laying around from the sale of some other property. So what I will probably do is escrow, meaning put in trust, probably about a year to 18 months worth of these payments. So I'm just gonna go ahead and write that check out the door, boom, it's done, and I know that the mortgage is paid for the next 12 to 18 months. So that's going to give everybody time to get their stuff done. We're going to get this nice person some air conditioning here in the super hot Arizona summer, and they're very grateful to me for doing the deal. It's fantastic. So again, take a look at these. These work very well when the deals are tighter or there's not a lot of equity. It allows you to control a piece of real estate for relatively little money, but you do have to be a responsible, non-shitty human to get these things done. So if you got any questions, please throw them up in the comments. Happy to answer. This is only a handful of the deals that we do. This is kind of rare that it comes through our office or that I do them personally. They just don't show up that often, but they are a really great way to acquire properties in other areas of the country that maybe homes take a little bit longer to sell or you haven't seen the kind of appreciation that we've had out here in the West. But anyway, take some notes. If you got any questions, throw them up in the comments. If you need to look at some other types of deals or creative financing, check them out in the videos. I hope you like them. Like I said, I do this all for free. This is the training you get in our office. I'll put a couple of links in the description if you need to do some further reading or research on this. But anyway, go get some work done, take a look, and maybe, hopefully, this will help you close some other deal. In the meantime, be good. We'll see you later.